After watching this video, you will know that this is the only ever SMC strategy you are going to need to be profitable in the market. Now, forget about those people saying that SMC does not work. My brother and sister, SMC do works. In this video, I'm going to break down everything you need to understand about SMC and how you can be able to catch a perfect entry with it. See, listen and listen very attentively. This is not like a normal video. This video is different and unique. Let's dive into the chart without making a lot of noise. Now, this is EURUSD. What do you understand from the structure? First of all, as an SMC trader, you're not trading like others. You need to first of all understand market structure, a pattern in which market moves. That is called market structure. And all this is being set into three or two basic terms, which is our change of character and our break of structure. If you can be able to identify a clear and good change of character and a clear and good break of structure, then you are now becoming profitable. Now, first of all, this is the weekly time frame on EURUSD. At the time of doing this particular video, the market is not moving, okay? So we are going to do our clear analysis and we're going to go back in time and check if what we did actually reflects in the market. EURUSD weekly time frame, what do we have here? Judging from this particular recent data, you can see this is a break of structure to the upside. You guys already know what is a break of structure and what is a break and what is a change of character. If you don't know this, go to my channel and you're going to watch the full SMC strategy, full SMC concepts. It's a 30 minutes video. After watching that, you come back here. Let's continue. This is a change of character showing that we are no more in a downside. We are now pushing to the upside. And this is a break of structure that is a continuation of the market trend. This is also a break of structure, a change of character. This change of character signifies a very huge thing in this particular market. You can see we are pushing to the upside and all of a sudden price changes character, showing that we are no longer going up, we are now going down. Where are we going? Where is the market going? What does the market change character? We are seeking liquidity. Remember what I said about liquidity? Money. All these are liquidity. So we need to cover all this up, okay? We need to cover all this and maybe continue our movement to the upside. But this is a weekly time frame. Before this is gonna happen, maybe till next year. Before this is gonna happen. But let's continue. Now, we can see that in our weekly analysis, you can see that in our weekly analysis, this is a bearish market. You don't need anybody to tell you. You don't need any smooth sayer to tell you that this market is a bearish market. You can see it with your eyes. This is a change of character, showing that we're no more going up, we're not going down. And this is a break of structure, a continuation that, yes, so this is a confirmation that we are going down. Where are you going to mark? Tell me, guys, where are you going to mark? You're going to mark out this particular order block. Now, I've always said that after marking your order block in the higher time frame, are you going to just sit down and relax and wait for price to take you that particular place before trading? Is that what I'm going to do? Don't worry, I'm going to teach you guys this particular how to trade a counter trade, how to trade it perfectly as an SMC trader. Okay, so you'll not be left behind, but just watch this video to the end. Now, after seeing this particular thing, this already shows that we are in a downtrend. So from now henceforth, which means in the next coming week, we are going to be doing what? Looking for a sell setup, which means every sell setup is going to have at least 80% accuracy, and every buy setup, because there's going to be a buy setup which is a trap, every buy setup is going to have at least 50% what? Win rate. This is the weekly time frame. Okay, let's go down to our daily time frame. In our daily time frame, we can see that the daily time frame and the weekly time frame are all in alignment. They are working together. I talked to you guys about time frames alignment, which means the weekly time frame, the daily time frame, and the 4-hour time frame need to be working in one particular time. Okay, all of them, if they are bearish, let all of them be bearish together. If they are bullish, let all of them be what? Be bullish together. If you are trading the 1 hour, 30 minutes, and 15 minutes time frame, if the 1 hour is bearish, let all the rest 30 minutes and 15 minute time frame be what? Be bearish. If the 1 hour is bullish, let all the rest, the 30 minutes and the 15 minute time frame be what? Be bullish. This is called time frame alignment. If you can understand this particular alignment, your win rate in this trading industry has already been increased. So now let's continue. In the daily time frame, this shows that what? That we are going to the downside. We are bearish. Our more concentration should be on a sell setups. Okay. Now, because this is our other block that we marked out, anything happening here, there are only two things involved. You see all this thing, the only two things involved. Either price produce for us a bearish setup or a bullish setup. If price produce for us a bearish setup, we are striking in the market without any hindrance. But if price produce a bullish setup, we are waiting for more and more and more confirmation. So let's go down, because we need to trade. As a trader, we need to trade. We are not just going to sit and wait for price to reach here. 4-hour time frame is also in alignment. You can see it in our 4-hour time frame. We are also what? We are also bearish. So these three time frame are all working together. They are all in alignment, showing that this particular pair is in a bearish movement, and the bearish movement is what? Is very, very, very strong. You can see it. Yeah, very, very strong. So what do we have here? We have this consolidating. The price is consolidating over here. You remember we have three types of market movements: bearish movement, bullish movement, and consolidating movement. So price is consolidating. Remember what I told you guys about bearish? Bearish is just, you see something like this, like this. We are going down, going down, going down. While bullish, you see something like this, a break of change of character, down. We are going up. This is showing that we are bullish. Consolidating, you now see something like this. Price is not breaking anywhere, just creating higher highs, just going zigzag. We're not going anywhere. Okay, so that is market structure movement. So from here you can see that we are consolidating, and from the internet you hear that if price is bullish, buy. If price is bearish, sell. But if price is consolidating, do not enter. Let me tell you something. This is the 4-hour consolidation. If you break down this thing now, enter down inside of it, now you see you have so many beautiful setup lying down. Okay, if you're not trading consolidation, can you tell me this thing? If you're not trading consolidating market movements, can you tell me this thing now? This is from the Wednesday 24th of June till 28th of July. So which means, as a trader trading Euro USD 4-hour time frame, you're not going to take any trade. Why? Because price is consolidating. Or are you just going to wait? You calm down and wait for price to reach this other block? Tell me in the comment section. But let's go back to our video. So confirming that we are also bearish in the 4-hour time frame, let's go down to our 2-hour time frame to see more market structure. You can see the more market structure. This is our 2-hour time frame, and remember, the 3 higher time frame are bearish. We are looking for sell position. So let us start looking for an hunting down our entry. Break of structure, break of structure. Okay, let's go down to our 1-hour time frame. In our 1-hour time frame, what do you see? What do you see, guys? Tell me what you see. This is a clear liquidity. Okay, but we're going to see that clearly in the 15-minute time frame. Let's go down. This is a 15-minute time frame, which is our entry time frame. Since our 3 higher time frame are in alignment. Now we're going to go back in time. Let's go back to Monday, beginning of this particular week. Monday. So from Monday, we are only looking for what? We are only looking for a sell position. A sell position. That's what I'm going to be looking for. And you can see all of a sudden we have this large break of structure to the downside. Where are you going to mark here? Guys, tell me, where are you going to mark here as your other block? This is the break of structure. You know what is another block? Are you going to mark here, or this big candle, or here, or here? Where are you going to mark as your other block? Tell me. Now, let me tell you something. If listen attentively, this is when your Fibonacci tool is needed. You need your Fibonacci tool to confirm something. You pick the tool, you mark from up here down to this particular side to see which particular other block is valid. This other block here, you can see this other block is not valid. Okay, this one is not even another block. I don't know what to call this bullish rubbish thing. Now, this is our another other block, but there's something I want you guys to see. Let's mark it out first. I want you guys to see something. Let me draw your attention. Now, this is our bearish order block, and it's a valid one. You understand? But behind it lies liquidity. Remember type of liquidity I taught you guys? What is this called? This is the equal high. Console this and this again. These are all equal highs. This is a trap, liquidity trap. They are waiting for SMC traders like me and you to enter from here and put a stop loss below here. Then price will not do what will not take us out. This is the trap. Okay, let's go back again in time. Let's go back again in time. This is our break of structure, and now we are marking this particular other block that causes this particular break of structure. We're marking that particular other block. This other block is above this liquidity. And again, look at on that thing, guys. Look at on that thing. Let me show you guys on that thing. Are you seeing? Now, this is LVG, our fair value gap here. And this fair value gap has already been mitigated before even causing this particular break of structure. You can see why this is invalid. Price created a fair value gap, mitigate it, and now causes a break of structure. That particular arrangement, everything there is invalid. Run away from there. It will take your money away. But now look at this particular one. Look at this. You can see this now. This is our other block here, and this is the LVG that price created here. You can see the LVG here. Now, do price mitigate this LVG? No. Price created this other block, caused the break of structure, leaving behind an LVG, showing that this particular structure is valid. You understand? LVG, showing that this particular structure is what? Is valid. But this particular structure is not what? Valid, even though this causes a very large break of structure. But even though this particular structure here is invalid. Let's take all this out. All these invalid shit things. Now, after marking this out, we are going to stretch this to look for our entry. This is our LVG here. So we're expecting price to do what? To retrace into this particular movement and give us a sweet entry, which you can see it from here. Price retraces and give us a clean entry to the downside. But are we just going to fold our hands and watch price going up? No. This is when the counter trading world comes in. This is how for you to counter trade. This is the 15-minute time frame. We have already marked out this particular other block which we want price to reach. Then now look closely. Look closely. This is the change of character showing that we are going to the upside. This shows that we are going to the upside, going to this particular area that we marked. Okay, now we're going to join the movement. Let's join the movement. Remember, we are counter trading, so our risks should be, this should be 50-50. Okay, now this is our first entry. Stop loss below here, TP above here. Now we have our second break of structure, okay, which give us our second what? Second entry. Remember, we are going up. After seeing this, I don't want you to say that SMC does not work, because it works. Our TP above here. You can see first clean entry, second clean entry. Now, till price now take us to this particular point of interest. Now, this is the CRT confirmation I've been telling you guys. Let me show you guys the confirmation. Now, this is inside our point of interest, and this is our CRT I that price take out, giving us an, you can see this is our model 1 entry. Then your sell entry should be from here. You are selling from here, and your SL should be above your AR, and your TP should be below here, this market area. Now, TP smashed. Let me tell you something you guys need to understand. Assuming our TP here was supposed to be above here, I will not set it, because we are counter trading. This is a buy. You can see this is the 1:2, this is the 1:2, and this particular main man of the character gave us a 1:5. Now you can see the difference between trading against the trend and trading with the trend. This is us trading against the trend, and this is us trading what? With the trend. And this also goes as far as giving us a 1:13 risk to reward ratio. 1:13 risk to reward ratio. No stop loss. You can see it with your eyes. No stop loss being smashed. Everything take profit, take profit, take profit. And you're telling me SMC does not work. Now, okay, now look at this, guys. Look at this. Let me teach you this. This is the latest break of structure. First of all, we are seeing this change of character to the upside. Are you going to wait for price to buy? Assuming price was here. Assuming this particular all these things haven't happened yet. All these things haven't happened yet. And this is the break of structure. Are you going to buy from here? No. Because of what? We are we are trading against the trend. You understand? We are not going to anywhere. We are not going to any junction. We don't have any point of interest. Our only point of interest has already been mitigated. Why we traded this is because we are going to a point of interest. But why we are not trading this is because there is no more point of interest. So now, you can see again, we have our change of character, the now good change of character that correlates with our market time frame is now this particular man here. This particular change of character. Then we are going to mark out the other block and set our limits. Price will tap us in and what? Boom to what? To the downside. Giving us again a 1:3, 4 risk to reward ratio. Looking for the entry, smart money entry, the CRS entry. This is it. You can see it here. The sweep of I, the model 1, and the entry. As easy as that. As easy as that. You don't need to complicate things in the market. Okay. Thank you guys for watching this video to the end, and see you guys in the next video. Don't forget to like, subscribe, and share. I still remain OLUWA-POUNDS, and I'll also always drop sweet and educational content on SMC, smart money concepts. See you guys in our next video.